Welcome back, dear traders. Traders of the US stock market and market analysts are trying to estimate the likelihood of various events. They are mainly focused on inflation, stagflation, recession, soft and hard landing, banking crisis, as well as a technical default and higher debt ceiling. However, it's very difficult to predict the outcome. Strong corporate reports supported the market in April, whereas Apple encouraged investors in May. However, these were just a short-lived phenomenon. Today, it may become clear whether US politicians will reach a consensus on the debt ceiling or not. Notably, the expected news may push the market to the red zone. In our review, we will talk about all the possible events in detail. As anticipated early this week, traders were waiting for the key reports. Trading was sluggish and indexes showed just significant changes. Thus, the Dow Jones closed with a decline of 53 points or 0.16%, whereas the Nasdaq managed to climb by 0.16%. Meanwhile, the S&P 500 added 0.04% to stay at 4,137 points. On Tuesday, the pre-marketing session was less ambiguous. Indexes futures showed tepid trading and slid deeper into the red. The lows totaled 0.2 and 0.5%. Today, the market sentiment could be mixed. This could be explained by the meeting in the White House, fresh corporate reports, and speeches that will be delivered by officials of the Federal Reserve. Thus, the expected range for the S&P is between 4,070 points and 4,180 points. On a Monday, the US stock market activity was low after a strong rally on Friday. During the better part of the day, stocks were shaped by the estimates of new quarterly reports and changes in the banking sector. Thus, Tyson Foods shares dropped amid unexpected losses in the second quarter and a lower outlook for early earnings. A rally in the shares of regional banks was not long, and that trend reversed by the end of the session. The situation took place just after the PacWest announced a slump in quarterly dividends to boost its capital. Curiously, at the beginning of the session, the bank's shares surged by 30%. The long-awaited Senior Loan Officer Opinion Survey, which was released by the Fed on a Monday, showed that the failure of three regional banks had a less severe impact on the banking sector than previously thought. However, it has failed to calm down the market. The data indicated that firms of all sizes were showing less demand for credit than 3 months earlier. Tighter credit conditions for the US businesses and households in the first quarter of 2023 can be attributed to the impact of higher interest rates rather than the Silicon Valley Bank collapse in March. On a Tuesday, the US banking sector saw another drop, resulting in more speculation about its weakness. Shares of PacWest fell by 13.6% after the lender's decision to cut its quarterly dividend on a Monday raised fears about its financial stability. Remarks by US Treasury Secretary Janet Yellen also failed to give support to US banks. Yellen stated that while some regional bank stocks remained under pressure, deposits had stabilized and regulators stood ready to help. We are not seeing substantial deposit runoff. There is some pressure on the stock prices, but our banking system is well capitalized. It has access to liquidity, and regulators stand ready to use the same tools we have in the past if there are other pressures that arise that could create stagnation, the US Treasury Secretary said. When asked if she would support a temporary ban on a short selling of a bank's stocks to relieve pressure on regional banks, Yellen said that was a matter for the SEC to decide. In addition, the Small Business Optimism Index has fallen to 89 points, its lowest level since 2013. Stock indexes failed to climb following the release of fresh earnings reports. Skyworks Solutions shares fell by 9.8% in pre-market trading after projection its current quarter revenue and earnings short of estimates. Shares of other Apple suppliers, including Qualcomm and Qualcomm, fell 0.5% and 1.6% respectively. PayPal shares dropped by 4.5% as it cut its outlook for annual adjusted operating margin overshadowed its profit forecast raise. Apart from earnings reports, traders also keep an eye on the debt ceiling meeting. President Joe Biden will hold talks with the Republican House Speaker Kevin McCarthy and other congressional leaders at the White House. Joe Biden, Republicans, and Democrats will try to resolve a three-month standoff over the $31.4 trillion debt ceiling. The government could run out of money to pay its bills on June 1. The Bipartisan Policy Center agreed with the U.S. Treasury Department's deadline. It believed that the government will begin defaulting on its payment obligations between early June and early August if the debt ceiling is not raised. Meanwhile, the earnings season for the first quarter is coming to an end. The estimated decline is in the first quarter, S&P 500 earnings has improved and is now at just 0.7% year over year. Analysts expected a drop of more than 5% before the start of the earnings season. Today, Airbnb rival Fox and Occidental Petroleum will unveil their profit results and forecast. Apart from that, Fed policymakers will deliver speeches during the American session, and it may help stock indexes to rise. The US dollar index grew higher today amid expectations of talks on the debt ceiling. Before the American session, it added 0.45%, trading at 101.80. It's likely to remain in the range of 101.10 and 102.30. Apart from the upcoming meeting at the White House and inflation data on a Wednesday, its rally was facilitated by a significant decrease in the risk appetite. The greenback also regained luster with investors, as I said, have an asset after the International Monetary Fund said it's worried about the turmoil in the banking sector. IMF chief economist Pierre-Olivier Krisch has warned that the story is not over. He added that EU banks are not immune to problems and the bloc needs to discuss mechanisms to deal with the failed banks. The euro lost about 0.5% against the US dollar. It was unable to rebound even after the speech of the ECB official Peter Casimir. He noted that the ECB may stick to monetary tightening for a longer period of time. September could be the earliest moment when policymakers can judge whether past rate hikes have been effective. Optimism about the global economic recovery was undermined by China's fresh data. Imports fell sharply in April compared with a year earlier. Exports grew at a slower pace in March. The US dollar as a safe haven currency was able to advance despite concerns over the US financial stability. Fed policymakers Philip Jefferson and John Williams are scheduled to make speeches. Their comments may boost the US dollar. However, its trajectory will mainly depend on the results of the meeting at the White House. Against this backdrop, the Canadian dollar retreated against its American counterpart in the course of the USD session. In the intraday trading, USD CAD gained 0.19% and was hovering near the level of 1.3397. The instrument is projected to trade in the range between 1.3350 and 1.3470. Although the optimism regarding the US dollar is rather unstable, it's still weighing on the loonie, coupled with a decline in oil quotes. Oil depreciated on Tuesday, raising gains from the past two sessions. After rising by 2% on Monday, both benchmark grades entered the red zone in the pre-market trade. Thus, Brent crude was down by 1.5% to trade at 75.84. Apart from inflation fears and uncertainty around the US debt ceiling, the energy market was discouraged by the downbeat economic data from China. According to the latest report, China's imports contracted sharply in April, proving weak domestic demand. As for the cryptocurrency market, it's already licking its burns after several days of stress. The current movement can hardly be called an uptrend. It seems more like the leading crypto tokens are slowly rebounding from support levels. Closer to the opening of the New York session, Bitcoin gained 0.4% and was hovering around $27,650 per token. As for popular altcoins, most of them spent the day recovering from the recent losses, although at a very slow pace. Ethereum, Solana, Ripple, and Cardano and Litecoin recovered in the range between plus 0.1 and plus 2.7%. On a Monday, apart from worries around Bitcoin withdrawals from Binance, it was reported that the Bittrex crypto exchange has filed for bankruptcy. According to Bittrex, it has assets and liabilities ranging from 500 million to $1 billion. Bittrex said it was still holding crypto assets of US customers who did not withdraw funds before April 30. The crypto exchange said it intended to ask the court for a limited reopening of customer accounts so that the assets could be returned back to customers. The company ceased operation on April 30 and said that the bankruptcy filing would not affect Bittrex Global, which works outside the United States. The Securities and Exchange Commission sued Bittrex on April 17 and the lawsuit remains pending. Earlier, Bittrex agreed to pay $29 million in fines to the US Treasury Department for apparent violations of sanctions on certain countries and anti-money laundering law. Meanwhile, turmoil in the US banking sector may tether the least risky asset in the world of crypto. Demand for the coin has been so strong that its peg to the US dollar has held above 1 since mid-April, hitting 1.002. As for Bitcoin and its outlook for Tuesday, the asset has settled near the high of 27,650. And BTC may decline towards the level of 27,200 and even lower to 26,900 if the price breaks below support. This was a review of the US free market trade by InstaForex. We hope you have successful trading. Stay with us and see you online tomorrow.